This isn't great news for the UK, but it's certainly less bad than it could have been. I think still the government and the Bank of England find themselves in a very difficult position because the choice for the Chancellor next week is not so much about what's going to happen. He's already told the market that that debt forecast needs to be coming down over the next few years. It's rather the timing. Does he decide to front load that pain over the next 1 to 2 years, or is it pushed out to after the next election, we would assume, sort of delaying that into 2025, 2026? Because at the moment, you can make a strong case economically to say front load it, bring it forward, reduce the amount that the Bank of England has to do in terms of trying to slow the economy down. But politically, clearly, there's a difficult challenge there.
From a market perspective, I thought what was interesting yesterday was that the biggest bang for the buck wasn't in the FTSE, it was in the 250. And that suggests to me that there is an appetite here to own the UK, but perhaps the strength of the dollar and fears around how many more rate hikes from the Bank of England will come has dampened some enthusiasm. What's your read on how you make money from UK stocks at the moment? Would you go FTSE 100, 250 stocks, 350? Where's the opportunity?
Sure. So I think yesterday you have to look at the UK in terms of what was going on in global markets, which is that whatever was beaten up the most, whatever had been hit hardest by rate rises this year, was going to be the parts of the market that traded most strongly during the day yesterday. I think still looking forward, the sector composition of the FTSE 100 is more attractive in my view. I mean, yes, it was the tech stocks that were rallying yesterday, but cooling inflation, a longer economic cycle, a more mild downturn next year should all be good for cyclicals as well. And still, I think the outlook for the pound is fundamentally weak. The UK has a big current account deficit. The Bank of England, raised too fast and deepen the recession, raise not quickly enough and let inflation get out of control. I would still expect the pound to be trading weaker over the coming months, and that to me leads you to the FTSE 100 over the 250 at this point.
We're looking at a lot of data this morning, German inflation data crossing again double digit as well, and as we take stock of the US inflation numbers, how much heart do we take out of the fact that that was a lower print and we seem to be going in the right direction? Can we extrapolate out for other economies from here?
So I'm not sure you really can extrapolate out to other economies, primarily because the situation in Europe is so different. Look at the gap between headline and core, for example. It's much, much larger in Europe than it is in the US, given the extra energy weight. That being said, the print yesterday was about as good as you possibly could have hoped for. This is an environment where inflation has been so politically sensitized as well that the difference between something beginning with a 7 and something beginning with an 8 is massive, because it allows the Fed to feel like they're making progress. They can come now, we'd still have another inflation print to go, but assuming that one's cooler, they can come to that meeting in December and say, look, we peaked at 9, we've got through the 8s, we're into the 7s, and we see a clearer trajectory for next year. So US inflation is still really the most important number next year to set the tone for all markets.